Hey everybody, Glenn Tompkins here on our YouTube channel, and today I got a video that you requested. Yesterday on our Trending Thursday, I asked what kind of video you wanted, and this is the video that you wanted: growth stocks versus value stocks. So I've got 3 growth stocks for you, 3 value stocks, and if you want to know what they are, you sit right there. Hey everybody, Glenn Tompkins, Senior Instructor here on our YouTube channel. Glad to have you. If you're brand new to the channel, please don't forget to hit the subscribe button and hit the bell icon so that you will be alerted when new content like this comes out. And if you like what you see, don't forget to smash that like button. Let me know that you are interested in what we have to do or what we show here, and it's well worth your time to stop by and spend some of your time with us in our videos. So, as I mentioned, today is all about value stocks versus growth stocks, and I'm going to start off by talking about which is which. So many of you may be brand new to the channel or brand new to investing, so let's break down what the difference is between growth stocks and value stocks. Now, right here, growth stocks are those companies that are considered to have the potential to outperform the overall market. We have an indicator designed specifically to show you stocks that have the ability to overcome or outperform the overall market because of their future potential, upside potential. Value stocks, on the other hand, are classified as companies that are currently trading below what they are really worth. We have an indicator for that as well, and will thus provide superior return. Now, which one is better? And this is kind of important. The comparative historical performance of the two subsectors yields some surprising results. So, here it is. The question of whether growth or value investing is better must be evaluated in the context of an individual's investor's time horizon, the amount of volatility, and thus risk can be endured. That is key. So when is a good time for growth stocks? When is a good time for value stocks? Normally when the market is going up nicely, coming off of a bottom or just trending higher, most people are in tune to buy growth stocks. But when the market starts to get rickety-rackety, either moving sideways or even pulling over, more people will go to the stocks that they feel comfortable in the long-term plays or value plays. Growth plays are looking for good explosive possibilities, where value plays are long-term plays that are undervalued, good stocks that normally pay a dividend that are included in this. So it all depends on what you want to do. Now, how about this? This is a novel idea. Why not have both in your portfolio at any time? You have the insight of having some great growth potential, but for long term in your retirement, you've got some great value stocks. Nothing wrong with having the both of them, but to lay out when is the best time to play either one of them. Heck, if the market's going up, you can play them both at the same time. But normally when the market pulls back, when people are either hedging their portfolios or getting more in tune with the more comfortable longer-term value plays. All right, with that being said, let's get into the software. Here's my list of value stocks. Let's start with value stocks. As I look today, all of them were down today, but notice they were all down, but they are all buy recommendations. Now, what did they talk about in that Investopedia definition? That these stocks were undervalued stocks, that they were trading under their values. So in the VectorVest system, we assign a value or an intrinsic value for every stock. Right here. And you notice that I have price and value right next to each other, so I can determine and discern right from this list which stocks are undervalued. And notice that every single one of these stocks is trading under its value, which makes it a great potential for a value play. Which stocks am I looking at? EOG, Wells Fargo, WFC, and of course Morgan Stanley. And I like the bank stocks right now, specifically if we know that interest rates are going to rise. Bank stocks are going to be a strong beneficiary of that. So I think from a value perspective that these are two good stocks to be in. And we all know that petroleum is moving, so here's a petroleum stock as well. So let's look at some more information about these. Relative value is the stock's upside potential. All of these stocks have the potential to outperform a market or outperform a AAA corporate bond. Relative safety is the consistency and predictability of financial performance. Do these companies meet or exceed their earnings expectations quarter over quarter, year over year? And stocks with a relative safety above 1, because these indicators are cast on a scale between 0 and 2. When these indicators are above the value of 1, it's favorable. Notice that Wells Fargo is the only one in the safety category below 1. Relative timing tells me if the stock is in an uptrend. So look at these. All of these stocks were down today, but all of these stocks are in uptrends and decent uptrends as well. They're all buy recommendations. Now, when I look at value plays, earnings is important. Why? Because earnings is the engine that drives the stock's price higher. All of these are nicely positive earnings, and then on top of that, they grow their earnings, all of them in double digits, with EOG, the petroleum stock, growing their earnings at a clip of 44% a year. Now, let's talk about the dividend side of it. All three of these stocks in the value plays pays a dividend. They've got decent dividend yields as well. And VectorVest has an indicator that talks about the safety of the dividend. Based on the scale between 0 and 99, where above 50, the stock has got a high potential to maintain or grow its dividend. Notice that all of these dividend safeties are above the value of 50. So not only are you going to make money on these long-term on capital appreciation, but you have the passive income of dividends, and these are good dividend plays as well. All right, so now with all of that, I think that you've got a good picture of why these are good value plays. Let's highlight them. Excuse me. Right-click, view on the stock graph. Let's go peep them out. Now, because these are value plays, I'm going to look at them on a one-year graph. Remember, I'm looking at longer-term plays. I'm going to take off stochastics, but I do want to put value on. Look at these. EOG, petroleum stock, clearly undervalued. RT above 1. I'm looking at 3 and 8 exponential moving averages. They're still good, but really a great looking long-term stock. Let's go put on the next one, which is Wells Fargo. Bottom left, top right, nicely undervalued. 3 and 8 look good. Down day to day, but look at the 3 and 8 coming off a level of support. Good looking stock, undervalued. Now, the reason why being undervalued is so important is because normally within 1 to 3 years, price and value will meet. If a stock tends to be overvalued, it tends to fall down to meet value like it did here, but value took off. So in this case, the stock is nicely undervalued. Stock is undervalued most likely. Look at the stock's price move up towards value, good upside. And let's go to the last one, which is Morgan Stanley. Look at that, nicely leveling out here. Look at that beautiful level of support, bouncing off support, extending away from that level of support, hitting a new high, currently still undervalued, but value and stocks price are getting very close to each other. I would keep my eye on it, but still long-term, it's a company everybody knows. It's a company that everybody knows. All right, so those are my value plays. Now we're going to move over and change gears and go over to the growth plays. Now on the growth side of the place, growth is looking for stocks that have the good upside potential. Remember, relative value is that indicator for me. Relative value shows me the stocks that have the ability to outperform a AAA corporate bond over the next 1 to 3 years. Based on that scale between 0 and 2, EGY, another energy stock, even though it is a growth play, should outperform that AAA corporate bond by 52%. Grand Tierra, GTE, should outperform by 46%. And Clean Spark, man, this is a clean energy slash crypto stock. Let me show you something about this stock real quick. Let's go look at the stock analysis report. And I like what this company does, and I like it from a growth perspective. Sustainable Bitcoin mining and energy technology company that focus on solving the modern energy challenges because a lot of the miners use a lot of energy to farm Bitcoin. And this is a company utilizing its ability to hone that in and keep it under a manageable level. I like this. As a growth play, I think it's good. It's the only sell recommendation in this list. This is one of the few times where I'm going to say it's okay because of what this stock does. Now, as crypto is getting hurt, this will be affected. That's why the stock is a sell recommendation. But as crypto starts to move up, this is going to be a good play. It's up. Look at this, almost 12% today, even as a sell recommendation. All right, so the biggest thing for me when I look at growth stocks is relative value. These stocks should all consistently outperform a AAA corporate bond. Now, I'm willing to give up some safety on these stocks. Why? I want the pop. I want the price appreciation. But I'm willing to give a little bit more volatility involved in getting to that because these relative safeties are below 1. Remember, earnings is the engine that drives the stock's price higher. Relative safety looks at this company's consistency and predictability of financial performance. These companies may or may not meet or exceed their earnings expectations, all right? Relative timing, 2 out of the 3 are in uptrends and really good uptrends too. CleanSpark, on the other hand, is not. Remember, it's in that bit mining space, clean energy space, so it's gotten affected by that. But I think upside potential is there big time. Look at earnings. All of these have positive earnings growth rate. Let's go see if they pay a dividend. Only one pays a small dividend with a dividend safety of 64. Now, you know what else I like about growth plays? Sales. Do these companies sell? And I wanted to make sure that they did. I want to show you something. Look at the sales growth on these companies. Mind-blowing sales growth. So if earnings is the engine that drives the stock's price higher, the fuel is sales. These sales growths are amazing for a growth stock. This is exactly what you're looking for. And so I wanted to make sure that I found you some stocks that did that. All right, so let's move over. So I'm looking at EGY, GTE, and CleanSpark. Let's go look at their graphs real quick. Right click, view the stock graph. And now, because these are growth stocks, I'm going to put these back on a 3-month graph. I want to see what's going on now. I'm looking for the pops, the explosive. Look at that. EGY, 3 and 8, look great. Big wick at today's top of the candle, a little bit of selling pressure, but look at the volume. I'm going to take off the value because these don't need to be undervalued. These just need to have the explosive pop, the stocks that have the ability to outperform the market, in our case, the AAA corporate bonds. I'm loving the move on EGY. I'm loving the volume. All of these pretty much are above average volume. I will watch that, though. It's a lower dollar stock, but a lot of give back right there. Just make sure that the stock is going higher before you buy. Look at GTE, also in the petroleum, bottom left, top right. Volume is good. New high today. Big wick. The body and the wick are pretty even. It's a low dollar stock as well. And you know, from a growth perspective, when you can find lower dollar stocks, now, could I have found you higher expensive stocks at a growth place? Absolutely. But you want the opportunity to take a low dollar stock that shows all of the characteristics of being a good growth stocks. You have the potential for an explosive play to make you a lot of money in a short amount of time. Thus the reason why I went the low dollar route. And the next stock is 931 CleanSpark. Again, because it's part of that whole Bitcoin thing. I love the setup right now. The stock found a nice base of support. The 3 and 8 just cross on rising volume. This could be setting up really nicely for a play for you from the standpoint of a growth play. All right, let's get back to my screen. Folks, this is what you wanted. Hopefully it was right in line with what you wanted. The difference between growth stocks and value stocks. And I think I provided a good list of 6 different stocks to accommodate what you were looking for. If you like what you saw, again, by all means, please hit the like button. Give me your comments. What stocks are you playing either on the growth side or the value side? And if I can make stories out of them, I'd love to do a follow-up video with your stocks. So make sure you hit the comment button. Tell me what stocks you're looking at, and we may do another video of growth versus values, but with your stocks, and we'll take a look. Folks, this video is over, and until the next time, see ya.
Yeah.